Hello, everyone, and welcome to our free September webinar. I'm so excited that you're joining me today. And as always, I love to know where you're joining from. So let me know in the chat, where are you joining me from? I always love to know where you are in all parts of the world, and always amazed and thankful that you're able to join me from all over the world. Today, I have some special guests with me who are going to talk to us about developing an outsourced advisory service. And here we go with the chat already. Oh my goodness, it always goes too fast for me. And I always seem to see all of the Texan people because I'm from Texas, but I saw someone from Virginia, Buffalo, Rachel from Wisconsin. Let me look. Dayani from Ottawa, Canada. Oh, Ken Bostrom is joining us. Hello, Ken. Zach from Lubbock, Texas. Deborah from North Carolina. Sherry from Manitoba. Denise from California. Parul from India. So we have some people from India, and Darlene waiting on a hurricane here in Central Florida. Oh my goodness.
Same here, Darlene. I'm in Jacksonville.
I'm amazed you've joined us, but thank you for joining us. Vanessa from Bernadette, Atlanta. And Michelle from Iowa, Sharon from Ohio. So isn't it exciting? Just so many people. And I love bringing you guys this content. I love being able to provide the education that you guys are looking for, and bringing special guests, which brings me to my special guests for today. They are Adam Lean and Jeff Prager with the CFO Project. And they will be presenting for us today how to add outsourced advisory services or CFO services to your bookkeeping business without all the headaches. I think we can all agree that we're getting this message from our industry that we're supposed to be doing advisory, but many of us still are not clear on what that is and what's the best route to go when providing advisories. And most importantly, how to confidently deliver advisory services, because I think we can all agree that, yes, we're supposed to be doing something beyond taxes and bookkeeping, but we just don't know what that is. So a couple of administrative things for you guys to keep in mind. The handout that you will see today is available for you. You'll see that in the handouts tab in your webinar window. If you don't see it, no worries. We will email everyone the recording of today's call and the handout as well. I will be monitoring the chat while Jeff and Adam are presenting. And so I'll be in there. You'll see me in the chat. And if you have any questions, which I know you will, put the questions in the questions tab and not in the chat. So put the questions in the questions tab. We will be monitoring the questions from there. And let's see, who else do we have joining? Cynthia from Kansas City. I see my friend Jeff Weathers from Shelby, North Carolina. Hello, Jeff. So as everyone is joining us, then I'll go ahead and let Adam and Jeff start. And Jeff, take it away.
Okay, thanks for joining us. I also see we have a bunch of people from Denver. Today we have a couple of topics that we're going to be discussing with you. The first is what a CFO really is. Let's define it. The second is what business owners are looking for. We want to look at this from their standpoint. The third is how to offer the CFO service. We're then going to show you our 6-step system to conducting a CFO service. And then Adam's going to wrap it up with how to sell your CFO service to new clients or upsell to existing clients. A little bit about Adam and I. We're both former accountants turned business owners. I myself am a retired CPA, meaning I've been doing it long enough and I'm old enough that I don't have to take CPE anymore. But together, Adam and I developed a system to provide a high quality CFO business advisory service to help business owners make more money in less time and with less stress. Now, together, Adam and I built a very successful outsourced CFO firm. We had a problem. We were growing so fast we couldn't keep up with the demand. So we created the CFO Project.org to train accountants, bookkeepers, and other financial professionals on offering a scalable and systematic CFO service to help business owners have a growing and more profitable business. So let's kick this off. All right. Let's start talking about what a CFO really is. First of all, we think they're a strategist. They're a forward-looking advisor, someone that uses numbers to drive decisions, someone that understands the past, the existing financials, but more importantly, the future, the vision of the business owner has for their business. And they can help to put together a plan to help the business grow. Now, think about this. All big businesses, public companies, have a CFO. Think about Amazon, Microsoft, Coca-Cola, Apple, Google, FedEx. Big businesses have CFOs. Well, a CFO does basically three things: track profit and cash flow, analyze the financial strengths and weaknesses of the business, and propose corrective actions. Now, what do you think all businesses need? They need the exact same thing. They need someone to track profit and cash flow, analyze the financial strengths and weaknesses, what's working and what's not within the business, and propose corrective action.
So Jeff said that all businesses need somebody to do those three things: track profit and cash flow, analyze the strengths and weaknesses, and propose corrective actions. But guess what? Most businesses are small. In fact, 99% of all businesses are considered small. They don't have someone that can help them do those three things, help them track profit and cash flow. They don't have someone that can help them analyze the financial strengths and weaknesses of their business. And they don't have someone that can propose corrective actions. Now, think about this. All of us, we're likely their bookkeeper and or their accountant. Our job is to literally keep the books. Our job is a very important job, but we're not getting paid to provide the strategic help, which is forward-looking. We're getting paid to record the past, make sure it's correct. It's a vital job, has to be done, but we're not getting paid to do the thing that they need to help grow, to help strategize them, be a business advisor. And likely a lot of us on this call are providing that type of service, but for free. We're giving away this valuable, our valuable knowledge and insight into their business. We're giving it away for free as part of our existing bookkeeping service. And we'll talk about that a little bit later on. But also think about this. Business owners, they can't talk to their employees about business strategy. It's not possible. They don't want to bring home more baggage home to their spouse. They can't talk to their friends about it because their friends don't get it. In short, business owners are stuck. They're overwhelmed. They're isolated. They're stressed and confused, specifically about what do I do to grow my business? I want to make my business a success. I want to be financially okay. Who do they turn to for help? So if you want to sell a CFO or business advisory service or add one to your existing bookkeeping practice, you must be able to understand what your prospects are facing. You have to be able to walk a mile in their shoes. Once you do that, you'll have no problem attracting and then converting business owners to your outsourced CFO service. So we're going to talk about how to do those things, how to attract them, how to convert them, and how to actually offer a CFO business advisory service that gets results. So I mentioned we got to walk a mile in their shoes. So let's look at 5 challenges that business owners are facing, and this will help us empathize with them so that we can sell them or upsell them or attract or convert business owners to our CFO business advisory service. So here are 5 challenges that business owners are facing. And a lot of these challenges will probably resonate with you since you already have business owner clients. First challenge, the business relies on the owner, or it all falls apart. Now, business owners are already working as hard as they can. If they take a day off, their business simply doesn't run as smoothly because the business largely revolves around them. I mean, think of a lot of your clients that you have now. You'd probably agree that most of their businesses revolve around them, and if they take a month off, the business just simply falls apart or doesn't run as smoothly. And because of that, business owners are working incredibly hard with little to show. If you think about it, their employees, and they'll even say it, their employees are typically making more money than the owner, but the employee has much less risk. They have much less stress, and they're doing a lot less work. The owner feels like they're on this hamster wheel. They're going 90 miles an hour. They're exerting all this effort. They're tired and overworked, but they're afraid to get off that wheel for fear of their business falling apart. But if just like a hamster on a wheel, they're never really going anywhere. They're just working a ton. The second challenge facing most business owners is that they're facing a catch-22 situation. Here's what I mean. They want to grow their business, but they need cash to do so. Like they need cash to buy more inventory, to expand locations, to do more marketing, to hire more employees, to buy more trucks, to buy more equipment. All that takes cash. So if they want to grow their business, they need cash to do those things, but they can't get more cash without growing their business. It creates this virtuous, this cyclical catch-22 situation that they constantly find themselves in. We call it the catch-22 roller coaster. They're on this roller coaster. They're going up and down. They can't get off the catch-22 roller coaster. Now, most business owners started this business because for one of three reasons. The first reason, they are an expert at their craft. So think of the dentist. The dentist is trained in dentistry, so they start or buy a dental practice. That's their craft. That's what they start a business around. And or business owners started their business because they want freedom of time. They want to be in control of their time. They don't want their boss to be telling them when they should work, when they should not work. They want to be in control. They also want to be in control of their money, being able to make as much as they want. Now, because there's this perpetual lack of cash, they're on that roller coaster, the catch-22 roller coaster. The business owner simply is forced to work harder to compensate. And thus they become the bottleneck. Think about it. They don't have cash, so they can't hire employees, so the business owner has to take that spot. They don't have cash, so they can't do more marketing, so the business owner is having to spend his or her spare time going to get clients. And when they do that, they're losing their freedom of time because they're chained to their business. They're losing their freedom of money because they're making less and less per hour the more they work. And they're losing the ability to work on their craft. The dentist or the heating and air business owner or the restaurant owner simply can't do what they wanted to do in the first place because they're having to do all these other things in their business. And the only way to remove themselves is the bottleneck. The only way to remove themselves from doing all these other things is to generate more cash. But of course, they have no idea how to do this. The third challenge facing most business owners is the business owner doesn't have a simple way, keyword simple, to understand what's working and what's not in the business. Now, I'm going to say something that may offend some of us on this call, but the typical financials, the P&L, balance sheet, statement of cash flows, they are made for us, their accountant, their bookkeeper. They are not made for business owners. They are accounting reports. They are not managerial reports. They are confusing to the business owner. And they don't tell the whole story. For example, the P&L starts with revenue, but what drives revenue? Where are leads, retention rate on those reports? They're not because they are accounting reports. Lead and retention rate are not accounting metrics. So they don't appear on those reports, but they have a lot to do, and they're very important to business owners. It's hard for a business owner to know what's working and what's not simply by looking at these reports. To make matters worse, all of us, the numbers people in their lives, seem to always be speaking a foreign language. We approach things from an accounting standpoint. The business owner needs it to be explained to them in business owner language, not accounting language. How can a business owner make decisions when they don't understand what's going on in their business? They simply can't. The fourth challenge facing most business owners is they don't have clear goals. Here's what I mean. They don't have clear and well thought out goals for the things that matter most, specifically the metrics that drive revenue, profit, and cash flow. Not just having goals for revenue, profit, and cash flow. Those are lagging indicators. We need goals for the things that drive revenue, profit, and cash flow. How could a business owner know if they're making progress each day, week, or month if they don't know where they want to end up, specifically for those drivers of revenue, profit, and cash flow? This is the equivalent of getting in the car and driving without a clear destination. You'll waste a lot of gas and a lot of time. However, this is typical of most business owners. They're driving without knowing exactly where they want to end up. And if they don't know where they want to end up, how can they course correct along the way? They can't. All right, the fifth challenge facing most business owners is they don't have clear direction. Again, they're busy every day, incredibly busy. However, the majority of the things they work on each day are not going to make a difference in the things that matter most. Of course, increasing profitability and increasing cash flow. Why is that? Well, it's because most business owners would prefer to do the things that they enjoy doing. The dentist wants to be a dentist. The person in a heating and air business wants to be a heating and air tech and focus on those things. Because no one is giving them guidance, they're relying on their gut and intuition, which is usually spot on when it comes to the craft. The dentist making decisions like, should this person get a root canal? The dentist needs to make those decisions because they're trained in that. That's what they do. They're experts at their craft. But they are not trained and they are not experts in making strategic tasks. Like, what do I need to do to make more money, to have a successful business? No one is giving them guidance. They're not getting direction. They simply don't know what to do next to have a growing and more profitable business. So let's talk about that.
So if business owners don't solve the problems, that 5 key challenges that Adam's just spoken about, they'll typically experience a wide range of emotional problems. So let's give you some of the bigger ones. The first is what I call fear, futility, and frustration. They begin to lose their confidence. They feel like they may not be able to provide a basic income to their family, which leads to stress. Stress means poor health. They're overwhelmed. Their relationships with their spouses, family, and friends begin to suffer. Instead of being there in the moment with their family and friends, they're distant and detached. So that leads to the last one, which is isolation. And when you feel isolated, you begin to lose your self-respect. You start thinking about the prospect of business failure. What's going to happen if this doesn't work? Who's going to hire an ex-entrepreneur? And then they're also afraid of looking like a failure to their family and friends. Bottom line is they have no one to talk to that understands where they are. They're alone. So what do business owners want? Well, number one, they want to have a successful business, however they may define it. 2, they want to have a growing and more profitable business. The third, they want to make more money. Now, making more money, like think about the dentist, may not be their mission. But sooner or later, they get into the catch-22 where they realize they need more money. And this is a way to solve catch-22. But most importantly, they want to feel successful. So what are they looking for? Well, Zig Ziglar says, you can have everything in life you want if you will just help enough other people get what they want. And what they want is simple. They want someone they trust, who inherently is you, by the way, to tell them what to do to have a growing and more profitable business. That's it. Someone they trust to tell them what to do to have a growing and more profitable business.
So let's look at that. They want someone that they trust. Why? Because there are not that many people in the business owner's lives that they can trust with helping them make strategic and financial decisions for their business. Now, remember, they can't talk to their employees. All of us, their bookkeeper or their accountant, we're not getting paid to help them. Their banker has no idea how to help them. Again, they can't bring more home to their spouse, and their friends have no idea how to help them. Plus, there's a lot of business coaches out there, but they're not a perfect solution as they don't understand the numbers. How could a business coach advise their clients when they themselves don't understand the implications to cash flow? So they're not a perfect solution. But here's the thing. As their financial professional, as their bookkeeper, they inherently trust you. They already trust you. Even if they're not a client, the fact that you're a bookkeeper, the fact that you're an accountant, they know that they can trust you because you're a financial professional. You understand the thing that they don't really understand, which is the financials. They can trust you. So let's leverage that trust to tell them what to do because they crave direction. They don't just want direction. They don't just want somebody to tell them what to do. They crave it. Business owners want someone that they trust to tell them what to do. Now, here's the thing. Business owners don't want more data. And this is the trap that a lot of bookkeepers fall into. They'll give their clients a lot of fancy graphs, charts, ratio analysis. It looks good. They don't understand it because they don't want to be an accountant. They don't want to be an analyst. They want you to do that and just tell them in plain language, what does this mean for me and what do I do? They just want direction. They want to do the thing that got them in the business in the first place. The dentist just wants to be a dentist. Person that opened a restaurant wants to be a chef or wants to be in the restaurant industry. They want to do the thing that got them in the business in the first place. They crave someone that they trust, which is you, to tell them what to do to have a growing and more profitable business. And as Jeff pointed out, that's their end goal. They want to feel like a success, whatever that means to them. They want to feel successful. Now, they crave, whether they verbalize this or not, they crave strategic guidance. They may not put it in these words, but this is what they mean. They want someone who understands the entire business, not just the numbers, and can give them strategic guidance. One of the most frustrating things from a business owner experiences is they go to somebody in their professional sphere, like their bookkeeper, their accountant, their lawyer, and then they'll ask for advice, but the lawyer, the bookkeeper, accountant will give advice specifically from their point of view. They're not looking at the whole picture. And the business owner wants advice by somebody that they trust, looking at the entire business, not just the numbers. They also crave financial guidance. This, of course, is our specialty. They want someone who understands the numbers and can give them financial guidance. There's not a lot of people that can do that. This is what a CFO does. A CFO understands the entire business from a strategic standpoint and a financial standpoint and can help guide the business owner towards having a growing and more profitable business. Whether you call yourself, you own a bookkeeping or an accounting practice right now, whether you add a CFO service or you call it a business advisory service, or you simply say it's a value-added service I'm adding to my existing business, whatever you call it, business owners want somebody that they trust to tell them what to do to have a growing and more profitable business from a strategic standpoint and financial standpoint. And so we're about to show you a 6-step system that you can do just that. But before we do, why should you offer a CFO service? We just talked about why business owners want a CFO or business advisory service. But why should you offer this? Well, it's what your clients want. We just talked about why. They want someone that they trust to tell them what to do, not just tell them what happened in the past. To get paid more, you must take on more clients and or work more hours. With a CFO service, you'll have a scalable way to work less while making more, because, and we'll talk about how to do that a little bit later on. It's because you're charging for your value, not necessarily your time. Plus, you have a lot of competition. In the mind of a business owner, bookkeeping, tax, accounting services is a commodity. It's all the same to them. We all know on this webinar right now, we all know that not every bookkeeper and every accountant is created equal. It's just simply not true. But in the mind of a business owner, it is absolutely true. They just want somebody to do the books. They don't understand the difference in the quality of books. And so if one bookkeeper can do the books for one price, why would they pay another bookkeeper to do the books at a higher price? We simply need to add more value to what we're doing. And this is something that is definitely adding more value. Plus, technology is disrupting our world, the accounting industry, whether you're an accountant, bookkeeper, enrolled agent. Technology is disrupting this industry at an alarming rate. And think about it. QuickBooks, they're actively marketing to your clients. If your client logs into QuickBooks right now, they're getting advertisements for their bookkeeping service. Artificial intelligence, they're predicting, will do what 90% of bookkeepers and accountants can do in the next decade. But someone that they trust cannot be replaced by a computer. Someone that they trust is you. So why don't you offer a higher value service in addition to the bookkeeping service, the phenomenal bookkeeping service that you're already offering? Because they get both, the best of both worlds. A bookkeeper, accountant they trust, combined with a strategic and financial advisor that can help them grow. So we're going to talk about a 6-step system that you can use to conduct this business advisory CFO service.
So we're going to go through the 6 steps that allows us to scale our businesses and not treat each client like a new part-time job. In addition, these 6 steps are going to help us solve the 5 challenges our business owners are experiencing. So every year we do step 1, which is set targets. And then monthly, what we do is go through steps 2 through 6. Now, let me explain these steps, okay? The first is step 1, we set targets. Step 2, we update and analyze the actual financial results. Step 3, we forecast the balance of the year. Step 4, we update the score. Step 5, we help our clients by creating objectives. And then with the client, we set next steps. Now let me explain each of these steps in a little more detail, okay? So in step 1, we're going to set up targets. These targets are designed to focus the client on getting the results they want. So at the beginning of an engagement and annually thereafter, we set numerical targets for revenue, profit, and cash flow. We suggest you first set targets during what we call a kickoff meeting with your new client, and then each December for the upcoming year. Targets are measurable goals. They're associated with a number that you and the client want to meet by year end. Targets should be aggressive yet realistic. Now, they should be something that your client is really excited about, so that when they hit these targets, they will feel successful. But here's the key, the paradigm shift, if you will. Instead of setting targets for lagging indicators, In other words, profit, revenue, or cash flow, we set targets for the leading indicators, which what we call drivers that drive revenue, profit, and cash flow. So you might be asking, what are those drivers? Well, let's go through them, okay? So the first drivers deal with top line growth, revenue drivers, okay? And they start with leads, the number of individuals who are a right fit for the business, have been made aware of the business through their marketing efforts and have indicated they may be interested in purchasing. Now, getting leads is great. Hopefully they're quality leads, but we measure that through the conversion rate. We measure both sales and marketing effectiveness here. The percent of those leads that the business has been able to convert to a closed sale. Now we've got clients. Now we measure the retention rate, the percent of all past customers that the business has been able to retain this year, driving number of transactions. And then finally, purchase frequency, not only how many came back, but how many times a customer purchases this year, regardless if they're new or retained. Now, those four drivers, leads, conversion rate, retention rate, and frequency rate, create the number of transactions that a customer or a business has. Now we multiply that by the average purchase value, the average amount of each purchase that a customer makes. So the number of transactions times the average transaction value equals revenue. So once we have the revenue, we could then work on driving profit or bottom line growth. So the first of these drivers is gross profit percent. It's the revenue less the direct cost that the business incurs when they make a sale. We control the percentage by either controlling the cost or controlling the pricing and the revenue that comes in. Next is the marketing expense. How much are we going to expend to generate those leads, those sales? In other words, generate the revenue. This driver is defined as a percent of revenue. Next, we look at payroll expenses, the amount of expenses related to paying employees and contractors that are, this is very important, not included in cost of sales. In other words, it's not variable, the fixed component of our payroll. And the last one is overhead expense. Waiting for this, there we go. Over expense, and that's the amount of all other operational expenses incurred in the business, utilities, rent, software. Those are traditional overhead expenses. Interest on debt, okay? That falls into that catch-all. Those drivers drive profit. But how many of you have ever gone to a client and said, hey, you made 10 grand this month, 100 grand, $1 million. It doesn't make any difference what the number is. And they look at you with total disbelief. And they say, if I made 100 grand this month, how come my cash account is only $100? And this gets into that first problem with that cash flow up and down. Okay. So the first challenge, okay, now what drives cash flow? Well, it's on the balance sheet. Number one, the increase or decrease in the inventory balance. If a business buys inventory, available cash is going down. If a business sells the inventory, available cash goes up. The next is accounts receivable. If a customer owes the business, available cash goes down. Think about this. You sold them, revenue went up, but you didn't collect. but you still incurred the expenses related to the cost of goods sold and the sales expenses and other expenses. But if the customer pays what they owe, cash goes up. The next is other assets, the amount of the tangible and intangible items that the business either buys or sell. If the business is buying assets, whether tangible or intangible, like goodwill, available cash goes down. And if the business sells an asset, available cash goes up. That focus, the first three focused on the left-hand side of the balance sheet, which is the assets. Now let's focus on the right-hand side. We look at the increase or decrease in debt, the amount of cash borrowed for use in the business. If the business owner is paying down debt, available cash goes down. Now think about this. You're paying debt, the interest does show up in your overhead, but the principal repayment does not. And that's what we're talking about. And if the business borrows debt, that has no effect on the P&L, but available cash goes up. I borrowed money. Now, the last source or use of cash is owner's equity, the amount of cash that the owner either puts into the business or takes out of the business. And I know we all have a lot of owners who think that if there's cash in the checking account, it's theirs to take. But here's the reality. If the owner withdraws cash, available cash to keep the business healthy goes down. But if the business owner invests cash in the business, either by getting more partners, selling stock, or putting in their own money, available cash goes up. So those are our drivers. And in summary, you have your revenue drivers, that which drives the top line growth, profit drivers, which drive the bottom line growth, and cash flow drivers, which drives your balance sheet. Now, here's the reality. A business can stay in business for years without profit. Think about Amazon. I think it took them 6 years before they showed profitable operations. But the business cannot last for one day without cash flow. So let's wrap up step one. All right, setting targets. After setting targets based on these drivers, you should be able to answer yes to the following questions. One, is the client excited about the possibility of hitting these targets? Number two, are the targets realistic? Do you feel they can be attained? Does the client? Are the targets prudent? In other words, if the owner is taking out cash out of his business, is that prudent in terms of the solvency, liquidity, the existence of the business? And finally, does the target assist with the client's business and personal goals, the vision they have for their business and their lives? So step one takes time, but we do it only once a year. Now, steps 2 through 6 happen each month. And it's the essence of what we do of our system so that we're not constantly reinventing the wheel or redefining our services. We analyze the actual results for each of the drivers that add up to revenue, profit, and cash flow. We look for trends and anomalies that will give us clues as to what's working and what's not in the business and allow us to go into step 3, which is create a forecast. Okay? In this step, we base the forecast is based on our assessment of the trends. And we create a forecast for each of the drivers so that we can determine where we think the client is going to end up by year end. Step 4, we're going to assign a score. Remember, Adam said we don't want to see more, our clients don't want to see more numbers. So we're going to assign a score by comparing the full year target for each driver to our full year forecast for each driver. And then here's the start of the magic. We assign a color-coded score, red, yellow, or green, based on what we want the client to focus on. And then based on that, we're going to create objectives, which is going to help us with challenge number 4, setting goals. We're going to create a short list of the most important items to focus on for the next 30 days. We're going to base these objectives on the drivers that are in red, yellow, or green. Remember, those drivers are now scored into we're telling the client what's working, what's not. The list should be a short list so we don't overwhelm the owner and they can see progress. And they should be measurable so that at the end of the month, when you meet next month, you could say, did you get them done? Thumbs up or not, thumbs down. Okay. The last one, and this is the most fun of the whole engagement and where 80% of our time goes, together with the client. By the way, this gives them direction. This answers challenge number 5. Together with the client, you're going to brainstorm specific next steps that need to happen to accomplish those objectives. If all the steps are completed, the objective, which was step 5, should be met. If the objectives are met, then the scoreboard, step 3, should turn green and the client will be on track to hit their target, step 1. This is how you give the client direction. This is how you add value to your engagement with the client. This is the magic. This is why you will get paid more to work with that client.
So Jeff just talked about the 6 steps to offer and provide a really good and highly valuable CFO business advisory service. But none of that matters if we can't get clients. So let's talk briefly about how to sell this CFO business advisory, again, whatever you want to call it, service to new leads and or upsell them to your existing clients. There's a key to this, and that is we've got to court our lead over a series of small, easy to take steps. Here's what I mean by that. In other words, we can't propose on the first date. We've got to court the person. Just like in life, if you want to marry somebody, you're not going to ask them out and on the first date and then propose after the first date. They're for marriage. They're going to think you're crazy. So same thing with this. This is a high ticket service. We're potentially charging, minimum of $1,500 a month. So it's 18 grand a year for this CFO service at minimum. It's just a high ticket service. We can't propose our service on the very first time we meet them or talk about, or the very first time we talk about a CFO service to our existing clients. If you propose too soon, you will lose your lead. So instead, we've got to court them over a series of steps. Why is that? Well, they do not understand what a CFO service or business advisory service is. They also don't think they need one. They think Coca-Cola needs a CFO, not my $4 million construction company. We all know that every business needs something like a CFO, but they don't think so because they don't understand what a CFO is. There should be one simple call to action. So every time you meet with a prospect, you should ask them to take one step. So you're courting them over a series of steps. But every time you meet them, there should be one step that you ask them to take. Cannot be ambiguous. One simple call to action. We must make it clear what step you want your lead to take. And each call to action should be easy enough for the lead to enthusiastically say yes. So we ask them to take a step, and their response should be yes, because the step that we're asking them to take is so small and so easy for them to do, it should be a no-brainer to say yes. Then, when you reach the last call to action, the last step, it should be yet another easy yes. When you finally reach the last stage, you're asking them to agree to pay you what you're asking for your business advisory CFO service. And it should be such a small step for them to say yes to. What are these call to actions? Well, when you first meet a lead or you have an existing bookkeeping client, the first step is for them to agree to have what we call a right fit meeting with you. So you'll say something like, I have a service where I help fill in the blank business owners improve the profitability and cash flow of their fill in the blank business. So let's say you go up to somebody that has a welding business. You would say something like, I have a service where I help welding business owners improve the profitability and cash flow of their welding business. Now, think about that from the business owner standpoint. Nobody has likely ever said something like that to them before. And remember, I didn't even use the word CFO in this statement. So they're gonna express some interest. They're gonna say something like, tell me more. Because if you're a business owner experiencing those challenges that we went through, and then the fear and the frustration and the isolation and the stress and all these other things that the business owner's feeling that Jeff went through, they're feeling all this. And you come up to them and say that I have a service where I help business owners just like you in your industry improve the profitability and cash flow. You're going to say, tell me more. Who wouldn't? But instead of selling them, remember, we need to court them. Instead of selling them, say, let's do this. Let's schedule a meeting or a call or a Zoom or a coffee where I can learn more about your business. How's next Tuesday at 2? So you're asking them to get on a right fit meeting. You're not even calling it a right fit meeting. You're just saying, hey, let's chat. How's Tuesday at 2 or next Wednesday? Remember, one simple call to action. Now remember, they already trust you. Or remember what we said earlier. They trust you. You're a financial professional. Somebody that they trust is telling them that they help business owners just like them, help them. They're going to say yes. This is one simple step that they can say yes to. Then you get them on that right fit call or the meeting at the coffee shop or the meeting at their office or the Zoom meeting. Most of our clients, the members in our program, most of their clients are all across the country or even the world. So the second call to action, once they're on this right fit meeting, should be for them to agree to a financial assessment on their business. So it should be an easy yes. Let me do a financial assessment on your business. So on this meeting, this right fit call, the right fit meeting, you're going to learn more about the business. You're going to learn more about the business owner, and you're going to learn more about the vision that they have for their business. The key is you are learning about them. They should be talking 80% of the time. It should not be you selling. This is too early to sell. You should be learning more about them and what they want. And this is going to build trust and rapport. Then at the end, you say something like, I understand what you're facing and I've helped other clients similar to you. But to make sure that I can really help you improve the profitability and cash flow of your business, or improve whatever they said that they were, their pain points were that you just learned about. Let me do a financial assessment on your business where I will spot red flags, I'll spot opportunities for growth, and I'll put together a high-level plan of what I think needs to happen for your business to be growing and more profitable. And you're going to offer to do this for free. What business owner is going to say no to that? Especially a business owner who already knows you're a financial professional, has already agreed to this right fit meeting. They've already shared a lot with you over the past, say, 30 to 45 minutes. And we've had clients that said this felt like a therapy session because of the questions that we've asked them, where we uncover their pain points, essentially, the vision they have for their business, what they want. So they've already shared all this with you, and you're saying, let me do a financial assessment on your business? Who's going to say no? Nobody. It's going to be a simple call to action, simple yes that they're going to give you. Then once they say yes to this financial assessment, you're going to get all of their the books. If you're not already their bookkeeper or accountant, you're going to get their books and you're going to do the financial assessment. Then you're going to call them back and say, hey, I have the financial assessment ready. And that's where the third call to action comes in. The third call to action should be for the lead to agree to get on a Zoom call to review the financial assessment and to see your proposal. So you'll say something like, your assessment's ready. What does tomorrow afternoon look like? That's the call to action, the easy yes you want them to take. I mean, at this point, if they've agreed to step 2, this third step, they're going to agree to. Then you're going to do the financial assessment and you're going to seamlessly move right into the proposal where you're going to say, here's what's wrong with your business. Here's what's going right with your business. But here's where I think it could go in order for you to solve all of the problems and the vision that you have for your business as you shared with me in the last meeting. Here's what I think needs to happen. And here's how I can help you get there. This is my service. It's a packaged CFO, packaged business advisory service where I will help you have a growing and more profitable business. And here's how much it costs. So you'll present the assessment, then the proposal, and then you should have a new client. So just to recap, you offer a right fit meeting. They should say yes to this because they trust you. At the meeting, you'll offer a financial assessment. They should say yes to this because who wouldn't want a financial professional to give them assessment on their business? Then you get access to their books, you do the financial assessment, you reach back out to them and say, let's get on a video call to go through your financial assessment. Who wouldn't say yes to that step, especially if they've already given you access to their books? Then on that step, the financial assessment and the proposal, you're going to present the financial assessment in such a way that it speaks to what you've already learned about them, their pain points, the vision for their business, where they want to go, what their goals are for their business, and your assessment of their financials. So at this meeting, you'll present the financial assessment and the proposal, and it should be yet another easy yes, which means you have a new client where you'll charge minimum $1,500 a month. We recommend that you charge a flat fee, no hourly billing, because you're charging for your value, not your time. We say minimum $1,500. Most of our members are charging around $3,500 for this service per month. And because you're using a 6-step system like we suggest in this webinar, you're spending about 4 hours per month per client doing the 6 steps. We've measured this over the past several years. 4 hours per month going through those 6 steps, which means you're now making an effective hourly rate of at least $375 with this client. And that's charging the minimum. Now, most accountants are making about $90,000 a year and are working 40 hours a week. The effective hourly rate for them is $43. That means one CFO client is worth about 9 tax or bookkeeping clients. This is how you scale your practice. And this is how you can charge more despite all the competition out there.
That should be very exciting to a lot of you. Let's recap where we are before we open it up for questions, okay? First of all, business owners need help. However, they don't know what they need. They just know they need help. By offering a systematized CFO service, you could give them what they want, which is guidance on having a successful business in a way that's affordable to them. And that's key, affordable to them, without them having to hire an expensive business consultant or fractional CFO who isn't you. Without someone like you, they could simply end up taking no action at all to improve their business. Think about this, okay? If you look at them a year from now, they're probably on a treadmill and are going to be exactly where they are today or worse off. 2 years from now, where they are today or worse off. 3 years. They need your help to get off that treadmill. So if you're interested in what Adam and I are talking about, we have a results-focused program where we'll show you how to add a CFO business advisory service to your existing practice. We'll help you dramatically increase your income by commanding higher fees, retaining your clients longer, and having a bigger impact on their lives. Let me stop there for a second. My longest client is over 25 years. Adam still has his first client of 77 years. 70, right. 7 years. But the reward, why I'm still doing this, why we still do it, is we have a huge impact on our clients' lives. Now, this program is exclusively made up of only financial professionals, accountants, CPAs, bookkeepers, enrolled agents. And we are here to help you every step of the way. You yourselves will no longer be in it alone. So, our program has 3 components. Training. We're going to train you on our complete system to provide a CFO service. The system is scalable and 100% white labeled. In addition, we offer community and support. You're going to belong to a group of other CFOs where we care about each other's success. Again, you're never going to lack support again. Okay, and the last is resources. The day you join, you'll have access to our library of templates, tools, guides, scripts, and a host of other resources that took us years and thousands of dollars to accumulate. In addition, you're going to get a results-oriented program, a weekly CFO roundtable meeting with a small group of other CFOs and your peers, some of which will be certified. We're going to offer you the CFO basic training that includes 6 modules, 34 lessons with videos, templates, and workbooks. If you just spent 15 minutes a day in those modules, you could finish it in 21 days, or you could have a binge weekend, okay? Also included is our monthly master classes where we teach you up-to-the-date real-world best practices that enhance your basic skills. You'll get access to our resource vault with hundreds of videos, templates, and step-by-step guides on marketing, selling, and fulfilling a profitable CFO service. And best of all, we offer a 3-client guarantee. With our system, we guarantee that you're going to get 3 CFO clients. So if you're interested in what we're talking about, book your right fit call with us to get your right fit call with us. Your next steps, go to the link below, complete the application, and then schedule a free call within the next 7 days. Now, to get the link is gocfo.live/Veronica-rightfit. gocfo.live/Veronica-rightfit.
I just put the link in the chat box as well, so just feel free to click on that.
Okay, so right now I think we could open it up to questions.
Thank you, Jeff and Adam. There has been a lot of conversations in the chat and several questions. And so what I'm going to do, actually we'll leave the link here for everyone to, if they would like to find out more, please follow that link. That's also in the chat for you guys. I'm just going to go over some of the questions, and I may combine some of them just because some of them are similar. There's a couple of questions about either which industry works the best with this program, or is this program something that they could use for, say, churches and nonprofits?
The answer is the drivers are universal to every kind of organization. All right, I'll define that in relationship to nonprofits and religious institutions in a second. The difference is in certain industries, there's a different weight on the drivers. Like, for instance, in our industry, the service industry, we don't have inventory. So we would ignore that driver. But it works in every industry. Now, going to religious institutions, nonprofits, non-traditional businesses, the drivers work, but you may have to redefine the name you're using for the driver. So, for instance, in a nonprofit, I did this for United Way. They brought in a lot of their host organizations here in Denver, and we used the same method but changed the vocabulary. So it's not number of transactions; it might be number of donations. And instead of average price, average donation. Instead of cost of goods sold, cost of providing the mission, the services that are in the mission. But with a little manipulation, which you could do within our product, if you will, our worksheets, they work universally. So at least I haven't come across one, and I've been doing this for over 45 years, that it doesn't work.
Fantastic. Yeah, that was one of my questions too, of like, how does this work for e-commerce versus service-based businesses? But that's great to hear, because then you don't have to pick a special niche. You can focus on your existing clients. Okay, question about qualifications. Do they need to have specific or special qualifications to do this program? Is working as a bookkeeper enough?
Great question. So yes, we are an exclusive program, and there are some qualifications, and that's part of why we have this application process. So if you click on the link, there's a couple of pages. You just fill out the application, and then you would self-qualify yourself, and then we'll get on a video call with one of us, and we'll talk to you via Zoom and further qualify you. But I can tell you that we do not teach accounting in the program. We don't teach bookkeeping in the program. We assume, and you have to come already with that knowledge. What we are good at is taking the knowledge that you have when it comes to bookkeeping, accounting, and then helping transform you to become more of a financial strategist and a business strategist, and do the one thing that's required of a CFO, and that's to get our client to take action. And I think that whoever asked this question, I think this may put you at ease in that half of our job, you could be the best, let me put it this way, you could be the best accountant in the world. But if you can't get a client to actually do something, to take action, then you would have failed. And that's the majority of what we are good at teaching our members, is getting them to help their clients take action, because we can give them all the financial reports in the world, and we may know what they need to do to have a more profitable business, but if we can't get them to do it, then it doesn't matter. And so so yes, you need to be qualified in terms of having the certain skill set already, but it's not as much as you may think.
Fantastic. A question about how much would the investment be if they wanted to purchase this program? Is this where you just want them to go to the link that you provided to find out more?
Yeah, so I could give you a range. And yes, the reason why we give a range instead of an exact amount is because there's no exact amount. It really depends on certain factors. And so we have this application process, and then you go on a phone call with one of us or one of our membership committee members, and we'll talk to you and we'll give you these options and whatnot. But we have a 3-client guarantee that means that if you charge the minimum, $1,500 a month, if you get 3 clients, that's $54,000 a year. So 3 clients a month at $1,500 a month times 12 months, that equals $54,000 a year. I can tell you that the fee of the program is less than half of 1 client. So in most cases. So we are financial people here. We know that in order for anybody, especially us, to make a decision, we have to know that we're getting a return on our investment. And we created this with that in mind. We want you to get an amazing return on our investment. And I could tell you we have a 98% retention rate in our program because people are getting a return on their investment. And they are, I mean, one client a year pays for itself. We've had members that have been members for years.
Fantastic. I'm going to combine a few of the questions just for the sake of time. There were a few questions about, well, what if this is a client that comes to me and their books are messed up? I'm assuming first we have to clean up the books. We have to do the bookkeeper accountant thing and clean up the books. And is that then the right time to offer the CFO service?
Jeff, you want to take that one?
Yeah, I will. If you wait for the books to be perfect, you may never, ever get started. So, Adam, and by the way, I want to go to the pricing thing and the guarantee for 1 second. We support you. If you're ever stuck, we are just an email away or a round table away, but there are a variety of ways for us to help you get unstuck. I want that to be really clear, is that we will support you. Now get back to the other question.
And it's not just us. We have a team of trainers as well. Plethora of help.
Okay. Client books. We're taking our clients into the future. This is a cool service. If the books are at least directionally accurate, so that you could paint a narrative and help your clients get to the next steps, then the books are good enough. Now, as accountants, we're going to probably want to clean them up, but we don't want that to be the message. I guarantee you, your clients aren't waking up 3 o'clock in the morning saying, gee, I wish I had cleaner books, right? They're thinking about cash flow. They're thinking about revenue. They're thinking about profit. As long as you keep them on that road, then they'll do what they need to clean up the books. But that maintains your value as a CFO, which in the pecking order of accounting is the highest valued person. So our answer is we want to be directionally accurate so that we can paint a narrative for the owner. And this gets back to what Adam said, so that your clients take action to move the needle forward.
Fantastic. Yeah, that is one concern I have because we struggle a lot with our e-commerce clients and the accuracy of their inventory numbers. And so I kept thinking, like, I can't do this program if I don't have good numbers. But you guys are looking at the forward. You're looking forward, not back. So I'm excited now.
That's actually where I got my start in all this. I used to own an e-commerce store for 8 years, and I started helping other business owners that own e-commerce stores. And the bookkeeping was a nightmare for them. Their books were not the best, but they needed directional help on how to grow their business, their e-commerce business. And so, this process is vital for them.
Yeah. Fantastic. A question about just like if let's say that we're going to talk to our clients about the service and that they just say, I can't afford that. What should we do?
So that's why we have that 4-step sales process that I talked through, the courting steps, and that we can't go to somebody at the very first meeting and say, I have a CFO service. It's $2,500 a month. And here's a brochure on all the features of this CFO service. You're never going to get a client that way. And they're definitely going to say, I can't afford that. So we've got to approach it differently. We've got to approach it from a guidance standpoint rather than a sales standpoint. So we have to first build a relationship with them to get them to trust you enough to go say yes to each of those 4 steps. So that's why we first have this right fit meeting. We only call it a right fit meeting so that we have a almost like a corporate way to get the client outside of their world. In other words, let's say you're at a Rotary meeting and you meet a business owner who owns a distribution plant, and they ask you what you do, and you say, I help business owners, have a growing and more profitable business. They say, tell me more. If we start at that Rotary meeting, sitting at a table eating a chicken lunch, and you start telling them about the CFO service, and it's $2,500 a month, and we do these 5 things, and we do this and this and this, this is so outside of their norm. They can't put it into context. We're not selling another brand of toothpaste. Everybody knows what a toothpaste is and why you need toothpaste. The person that you're talking to doesn't know what a CFO service is, nor do they think they need one. Plus, by telling them features, we're violating the rule. Seth Godin has this. He's a famous marketer. He has this saying that you've got to sell the hole and not the drill bit. In other words, when somebody goes to Home Depot or Lowe's or wherever and buys a drill bit for their drill, they're not buying the drill bit just so they have another tool to add to their collection in their garage. They're buying a drill bit because they want the end result that the drill bit provides, which is the hole. So we have to sell the hole. We have to sell why you need the CFO service, not the features of the CFO service. That's where a lot of fractional CFOs, business advisors go wrong. They say, well, I could do budgeting. I could put together pro forma statements. I could do forecasting. I could help you raise money, and all this. Those are features. We've got to speak to the whole. But the problem is when we first talk to a brand new lead, we don't know what the whole is. We don't know what drives them. We don't know what their pain points are. That's why we've got to get access to their financials. We got to understand their pain points by asking these questions. We got to understand the vision for their business. And that can only happen when we have their undivided attention. And we're at a Rotary meeting or a BNI meeting, or we're online in an e-commerce forum chatting with a business owner. That's not the right time to ask those questions. So they get them in a right fit call. So that's a roundabout way of answering that question.
Great. Can you talk a little? I'm sorry, Jeff. Go ahead.
I'm sorry. Can I expand? We have members that their closing ratio was like 25%, which is nothing to sneeze at. But going through the process that Adam has talked about, their ratios went up to 87%.
That's great. Fantastic. Can you talk a little bit more about the financial assessment? And there's a bit of confusion because I teach a diagnostic review and I tell them they need to charge for it, which is very different. So if you can talk maybe a little bit more about the financial assessment and why do you not charge for it?
So the financial is a great question. I think the answer is to when you should use what, the financial diagnostic or the financial assessment, depends on what your end goal is. And what we're saying with the reason why we suggest offering a free financial assessment is because our end goal is to sell them a CFO service, which means before we sell them a CFO service, we have to understand their business so that we can sell the whole, just like I talked about a few minutes ago. And the best way to do that is to get access to their financials. We all know that. And because our end goal is to sell them a CFO service, a high ticket CFO service worth at minimum $18,000 a year, we want to eliminate as much friction as possible. And so we say, let me do a financial assessment at this right fit meeting. Now, and I'm not sure what the diagnostic tool is, but I'm sure it's used for other purposes rather than selling.
It's for cleanups.
Okay, perfect. Yeah. It's not really for selling.
Correct.
The service.
Yeah. We're actually performing a service. That's what I teach them to get paid for it. But you're in the sales process.
Correct. This is a sales activity, not a.
Yes.
Right.
Other related questions are about the tools that you use. What sort of tools do you use to provide this service? Are they integrated with QuickBooks or Xero or other accounting software?
So I'll take that one, Jeff.
Okay.
It's 100% software agnostic. In other words, most 99% of our tools are in Excel. One, because Excel is very customizable and we need to be able to customize things per client. Two, every client or most clients are going to have different versions of different software. Some may use QuickBooks Online, QuickBooks Desktop, Xero, Sage, or even keep their books on Excel spreadsheets themselves. And so we have a system, the 6-step system. We provide you with tools. You don't have to use our tools. You can create your own tools based in Excel to do the 6-step system, but we provide them for you. And you just simply export the P&L, the balance sheet, and some certain sales transactions from whatever their bookkeeping software is. And then you would import them in a very simple way. It takes 30 seconds to do that into our software. You simply copy and paste the data using our tool.
Great. Question about how long will it take to get the first client if people sign up for your program?
Jeff?
I'll take that. The record so far is 24 hours.
Oh my. Okay.
The person signed on, didn't know what he was talking about, started telling all his existing clients, and 2 people actually signed up just on him talking about it. On average, when we onboard you, we're going to show you a 60-day path to getting your first client. Okay? But we've had a lot of people do it in as little as 2 weeks. Now, there are some people that they'll drag it on. But we really, really, really want you to get that first client within 90 days. There we go. 3 months. So, and again, our goal is if you're not, we want you on the phone or in a Zoom with us, figuring out what you're doing right and wrong.
Yeah. If you follow the instructions and you don't have your first client after 90 days, something is wrong. Let's just put it that way.
We're getting ready to wrap it up, so I'm going to take one last question. And I'm sorry if we didn't get to each question specifically. I tried to kind of summarize all the questions. But I think Sky, who asked her question twice, I'm sure she's eager for us to answer her question. But I think she also has a very good question about, let's say that you're working with clients in the same industry. Would there be a conflict of interest if I'm helping client A and client B in the same industry?
No. If you don't mind, I'll take it.
Go ahead.
As long as you don't disclose information from one client to another and you follow your professional ethics, you should have no problem. Like, I could have 5 painters in this area at different sizes or the same. If I can't give secrets, if you will, trade secrets of one client to another. But for the most part, like my specialty happens to be home building. I probably have a dozen home builders here in the Denver metro area. They're competitors. I just don't share one competitor's information with another. And that's the biggie. But they all know that this is my business and they acknowledge it.
And it also helps if your clients are spread out across the country or the North America. I mean, you could specialize in heating and air businesses, for example, and have 20 of them spread across the country. And they're certainly not competitors at all. Most of our members, in fact, have clients that they meet with their client via Zoom or similar online meeting, so they can meet with clients across the country.
Fantastic. Yes, and even at we specialize in Shopify sellers, and each client is so different from the other, just because they have very different business models. And you can always have a non-disclosure agreement with clients as well if they're concerned about that.
Yeah, absolutely. And we include one of those in our templates, our resource vault.
Fantastic. Well, thank you so much, Adam and Jeff, for presenting this to us. Just from looking at the chat, people just said this was gold. I think there's so much talk about, well, you have to do advisory, but no one tells us how. And you have a program that's really showing people how to be successful with this and showing us that, we don't have to have advanced degrees or that, we can rely on the training that you provide to do that. So again, thank you so much, Jeff and Adam. Thank you to everyone who joined us today or who is joining us via recording. We'll talk to you soon.
Thank
Bye,
you, Veronica.
everyone.
Thank you so much.